Hey traders, this is Rick with Hit and Run Candlesticks, and this is Saturday, February 5th, 2022. Thought I'd put a couple of charts out here for you. Actually, what I'm going to do this weekend is I'm going to put 2 or 3 videos out, and the first video is going to have 5 or 6 charts to ponder on it over the weekend, and then I'll post another one. I also want to reach out and mention to any of the Twitter followers out there, Twitter users, or whatever you call that. I've been posting on Twitter lately quite a bit, so if you do use Twitter, then please look us up there, Rick Sadler at Twitter. I think you'll be able to find it, and just give a shout out, say hi when you if you do use it. Would appreciate that. If you do get a chance, make sure you share those videos, and if you do like them, click on that little heart if you wouldn't mind. Okay, let's get started here. I want to start with the market a little bit. Let's talk about the SPY. So I made a couple little notes here. Spell this right, I guess. There we go. It looks as if we've hammered out a bottom, or we're trying to hammer out a bottom, okay? It's what it looks like here. We've had a nice, there we go. We've had a nice little run up to almost the 50-period moving average here. And then we've pulled back, and it appears that we're putting in a higher low with a doji, kind of a spinning top doji right here. Now we are underneath the Trendicator, and we're just ever so close to the T-line here. I had this gray box right here, and this gray box I think is a bit of a dangerous area, and I wrote right here, not much of an edge in this area. As a trader myself, I don't know that I have a big edge right through here, because while this appears to be hammering out that bottom, you can see the clear hammers, the long wicks, the matching wicks right in here, pretty close. The doji, and then we have a nice little pop here. You can clearly see where we have resistance, and then we broke out. It looks like the bulls are trying to attack it, but as we look at this chart, I think we have to also keep an eye on this downtrend here. I really think we ought to watch that. The 50-period moving averages right here, I think that's very important as well. So like I said, not much of an edge through here, and I feel that a little caution should be had while trading. So if the bears grab a hold of this, then what we're going to watch for is breaking down below this. Oh, what is it? 441 level, something like that. 440, 441, 439, right in here. And if we do break below that, then we're probably going to retest these lows, these January lows in here. Okay, let's look at the bullish side. On the bullish side, we have a little follow through. If we get through the 50-period moving average and challenge about 465.55, then I do think we get a good chance to get to 471.40 up here. We break through 470.40 and show stability, then I think there's a chance of 479. If we can show stability at that 479 level, bulls are still around, then I'm looking at 492 up here for a possible target, and then we'll take it from there, depending on what chart looks like. So, one of the things we've talked about this week a lot is you don't have to be in the market every single day. You don't have to take undue risk, and it might be a little risky in here. So trade cautiously. This Friday, I certainly did lighten up on a few positions, closed half of them. We did great. It was a fantastic day yesterday. In fact, I'm going to put some of those trades and maybe some explanation on Twitter there. So if you get a chance, you might check those out. So anyway, let's take a look at the Qs. 1, 2, 3 Qs, and you can see it's about the same thing. We've got a downtrend here that we need to get through. We've got what appears to be a bottom being hammered in, and then we have what appears to be a low, high, and a higher low. So far, it looks great, providing we have follow through. And we're going to need to take that 50 period moving average out. That's going to be important. So once again, this whole area right here, I'm just not sure, as swing traders, I'm not sure if we have a big edge right in here. So I like something better than 50%. And right in here, I think we have a 50-50 shot at making money, to tell you the truth. So I like my odds a little bit better. It doesn't mean that I'm going to stop trading. It's not true at all. I'm absolutely going to trade. I'm absolutely going to buy something long. And if I see something short, I will trade something short. But I'm not going to trade as heavy. And I'll just be cautious here. All right, let's take a look at some charts. So the first one on the list, which just because it's number one doesn't mean it's the best chart. It just means it just came up that way, okay? So Citigroup here. Now, I am currently long Citigroup. I did close part of it out, took some nice profits. We actually closed profits out up here, some profits, and then I did close some more profits right in here Friday just to eliminate risk. In a perfect world, what I would like to see is an inside day here, right there. And then I'll look to add to that Monday. And then we're going to look at 68 and a quarter, 69, possibly 71 up here for some trading. If we trade below the Trendicator, I'm not really going to like that so well. The whole Trendicator has become very popular lately. And for those that have Thinkorswim, a lot of people actually have asked me for the code to code it into Thinkorswim, and I will watch your email. I will get you a link to that this weekend, okay? So it's become very popular to trade this, after we go from red to green here, and then we trade that trend. So as long as we stay green and the trend stays up, we will trade with that. We have a nice hammer, and then we had follow through, and then a little more follow through, and we pulled back for a very nice higher low. We formed a bullish piercing candle right here off the 50 period moving average, and then we showed follow through up there as well. And now we're pulling back a little bit of flag right in here, and then another little bullish candle holding above the T line. Those of you that follow the T line, you know how, well, honestly, how precious it is. It just, it's one of the best finds that I've ever found on the charts, to tell you the truth. And I think when you marry it up with what we call the Trendicator here, red turning green, when you marry those two up, I think you have a dynamite chart. And we're going to be talking about this a whole lot more in future videos. So please stay tuned, okay? Alrighty, here's another chart setting up. BMY. You can see a very nice trend on BMY based on the 50 period moving average. See how that's just trending up, pretty smooth. And then from there, we're going to look for price to give us an entry. So we pull back here. Here's a nice hammer, hammering out the bottom. This also happens to be on the dotted deuce as well. And then we put a doji, and then we pop up. So when we broke out of this hammer right here, right there, when we broke out of that hammer, sorry, get my tools out right here, what that did is that set the bulls in motion to start this trend back up. So what happens to charts is buyers come in, money comes in and pushes a chart up. Money starts to dry up a little bit. Profit taking comes in. Basically what it needs, a chart needs consistent money coming in. So we get a little profit taking in here. And then what happens is when it gets down to a good deal, you might say, then more buyers come in and push that price back up. And that's what happens. Buyers come in, or money pushes the stock up. There's profit taking and a lack of buyers. It's not that everyone runs away, just no real buyers pushing it up. And what happens? It pulls back to a good deal, and then buyers step back in and push it up like this. So watching these red-green dots, watching the T-line, watching candlesticks can be just a huge, powerful, powerful piece of information in a chart. So here we have a doji, a hammer, a pair of dojis. We break out over the T-line and turn the Trendicator green. And here we consolidate a little bit. Notice this candle right here. Candle here on Friday. And I'm going to extend this line. There we go. Look how we came back and tested right here. Right where that hammer was. A beautiful example of the execution of price action and candlesticks. So up here we get the buyers step back in, and we actually have, it's kind of a mini, I'll say this very cautiously because it's not a true belt hold, but a mini belt hold, very tiny. But we have an absolutely well executed bullish engulf here. So I think what we're looking for now is an entry opportunity, and then we'll look at 67, 50, 69, and 72 up here. In the other videos to this weekend, or even if you look at past week videos, you can see more about what we talk about entries. Visa here. Take a look at Visa. Right now, I'm looking at 250.75 for a target area, 244.70 for a target area, and really that's all based on the fact that we, if we break out here. Now, based on the way we like to enter, the 3/8 trap, or very close to the T-line, or very close to the Trendicator, that's what we like to do. That gives us a good risk reward. And the reason it gives us a good risk reward is if it was to come below the T-line here, well, I wouldn't like the chart. So likely I won't be in it. If it was set up down here to the Trendicator, then that's about what we would look at down here. Now, I'm just not blindly using the T-line or the Trendicator. I'm going to look at price, and I'm going to put this where I think, for a stop anyway, for where I certainly don't want it to go below. And it just so happens on Visa here, above 224.50 is what I would have to see. Anything below that, and I'm not sure I want to do that because it just might take it down to the 50 period moving average. So kind of a tight stop here. All right. So here we've rallied up. Beautiful, beautiful. There we go. Beautiful, beautiful little run to the upside. And here we've pulled back to the T-line. A nice little doji here. So here's the thing about dojis. They're just indecision is all it is. It's just indecision. What I would like to see is bullishness above 229.95, and that might trigger an entry in the chart. And then from there, we'll be looking for about 8.5% or so up to $250.75. Now, another way to possibly trade this that we might look at is if we don't catch it in here, then we may look at that breakout area up here. So right up in there. But we're still going to look at 250.75, and then we'll reevaluate because that'll break us out. Or if we break out over the July highs, then we'll evaluate a new target and certainly may keep some of that trade up there. Hey, McDonald's is looking good here. Before I talk about McDonald's, on the other videos that I'm going to put out this weekend, it's going to be videos like, let's see, on What is this, number 4? So I'll do IBM right after this one. And then the later videos this weekend, I'm going to do VMW, Inlock, Hood, BITO, BBIG, Mara, BSBR, ALL, BRO, BRO, BBBY, SIRI, and STX. So keep an eye out. Look for those other videos. I'll have those out there before Sunday night, that's for sure. And then we can rock and roll next week. All right, taking a look at McDonald's. It looks like we've come down and put a bottom here. Certainly looks like it. It started with a hammer. So a hammer is an interesting candle because more times than not, with a hammer, you're not going to get a hammer and then just crazy bullishness. Normally that doesn't happen. I'm not saying it can't happen, and I'm not saying it doesn't happen. It does. But compared to what we see here, that's kind of rare. So what happens is you get this hammer put in here, and it's like nailing a nail into a board. And it takes more than one whack to get the nail in. So you hammer, 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 which I know these aren't hammers, but that's what we're doing here. We're hammering in the bottom. And we might hammer the bottom in with things like dojis, bullish candles, bearish candles, dojis, bullish candle, bearish candles, might hammer that bottom in. For those of you that don't follow the dotted deuce, that's where we are right now. You can watch one of the past videos on what that is, or I'll make a note and maybe mention on one of those videos and talk more about it later this weekend. So at 247.20 is where I'm going to call. It looks like we're putting this bottom in. And then from here, we've rallied up. Okay, so this tells me that the bulls are interested. And what I'm looking at is the fact that we've gone from a downtrend based on the red dots to a uptrend based on the green dots. We've also, there you go. We've also tested the 50 period moving average. We broke through the 50 period moving average, and we're testing again Thursday and Friday. Friday we ended up with a little doji here, or a little flag, what we call a PBO. PBO is a pullback opportunity. It's just an opportunity. It's just a pullback, minor pullback in a trend. So right now, I can put a trend up there like that. That's what I'm going to work with. Anything above that trend, I'll look at buying, and I'll put the buy box about something like that, right in that area. And then from there, we're going to look for 282, 272, 282 and change, 272 and change, and almost 276 up here for possible target areas on McDonald's. Let's take a look at IBM. IBM here. This is, if you're looking for a chart that shows off a cup and handle, that's a nice chart. If you're looking for a good picture of a cup and handle, you've got it right here. Here we hammered right at the 50 period moving average. Here's one of those occasions where price did pop right up after the hammer. So here is one of those occasions. So up we go, and here we pull back. Like a J-hook is what it is. And a J-hook, by the way, is a continuation pattern, bullish continuation pattern. So if we do something like that right there, you can see where we popped below, rallied up, and this is what we're looking for the J-hook continuation pattern. Now, there we go. One thing we need to be very, very cautious of is this line right here, because this is a downtrend line. We can take it from this, these June 2021 high over here, and then we start running into this, what is that, October highs, and we just continue that line to the downside, and you can see we're right there right now. So we really need to break out. I think it's a great price. I think it's great price action, good candlestick, a very nice visual on the candlestick showing the intention of the bulls, but the bulls still have to crack through some of those barricades. And we're going to need to break through that barricade. If we do, I'll be looking at 144 and change and about 151 up here. And that's just simply back up to the June 2021 highs. And then we'll evaluate for going higher. All righty. This is, what was this, 5? This is 5 charts we looked at. We'll look at another set of 5 or 6 and then another set of 5 or 6 before this weekend's over. I want to thank everybody for watching the video. If you like it, if it helps, please give us a thumbs up, leave a note. Really do appreciate it. And if you're into Twitter, go check it out. Rick, I think it's Rick Sadler at Twitter, something like that. Go check it out and check out some of our posts. Thanks, everybody, and have a wonderful weekend.